children of all, welcome to our for beginner show. I'm so thankful you guys are all here watching us. Hi to everyone who's watching it. It's a pleasure to be here. We'll bring on the other co-hosts here, but before we begin, we want to thank you all for being a part of the group and the little turmoil and all that changes in the we want to thank Bonnie for being part of it. She was a big help, and if you like her lessons, you purchase any movie. I really welcome to go there. It's better. More knowledge is better. But anyway, moving on to bigger and better things. First, we're going to advisors. My good friend Dalton, fellow Canadian. Dalton, welcome back to the show. How are you, sir?
Great. Thanks for having me back. I'm glad it's another show here. I can't wait to get started and help bring the good news to everybody.
Right. So there's been some big news in the world. We're going to be touching on them a bit, but briefly, the S&P 500 hit some historic highs. What does that mean for the future? Just quickly, one or two words on that.
So yeah, S&P 500 touched a new high on Friday. It ended up retracing and finishing about 10 points below the high. We'll have to see how it moves through that figure. We're all going to see whether it can actually punch through that 4,200 figure. And usually when a stock market hits a new high, we want to see how it moves through that high. Is it going to bounce off that high and move lower, or is it going to just shoot right through it? So this week of trading will be very, very important.
Excellent. Also, we're going to touch on trading a little later in the show. I'm going to bring on the other guy, that future Warren Buffett, when I say it. But my man Tony, welcome back to the show. Thank you very much for being here.
What's up, everybody? I don't know if anybody else had audio issues, but I had a hard time hearing you, so I don't know if it's working.
Oh, yes, in the comments. Let's see. I apologize. Okay, people can apparently hear us. It may be just my connection with you.
Okay.
If I need to, I will speak louder so that you can hear me. But Tony, you're very confused by Tesla, and Tesla had a big event happen this week. Quickly, we're going to touch on it later, but what's your opinion on what's going on with Tesla?
So I guess they had a self-driving accident where I think 2 people were killed. You know, I don't remember the story off the top of my head. I briefly read it one time, and I don't exactly remember what the cause was, but I know Tesla was disputing it, and they were saying that it didn't have anything to do with the self-driving feature. So I think there's still, it's to be determined still to find out what's going to happen with that. I guess they're going to have to do an investigation, but I don't think it's really going to affect them that much. I think it's more of a short-term setback because we all know that this stuff is going to happen. I mean, it's inevitable. Everyone's going to make mistakes. No technology is perfect, so it's inevitable, unfortunately.
All right, Johnny may be joining us later, our CEO of the group, but bringing Dalton back on. We're going to start with our first couple topics right now. Let me just bring that up. Something that has been somewhat prevalent in the group with the recent news in Turkey. We're going to talk, and Tony actually is the forefront on this. Let's bring him onto the top here. Safemoon to the moon, Tony. What's going on with Safemoon? What do you advise our members to do with this coin?
So I know I got a lot of backlash because I posted a video about this and I labeled it Safemoon to the moon ? But it's not that I'm promoting Safemoon. I'm just putting out an educational video to help everybody understand what Safemoon is, because it's a very confusing concept to grasp. And I spent an entire day, several hours watching different videos, reading all kinds of different articles from different sources, trying to figure out exactly what this is. And I'm still confused about it. So if anybody out there tells me they 100% understand Safemoon or any other type of alt currencies, they're lying to you, and run far away from them. But a quick synopsis of what Safemoon is. It's just another one of these alt currencies that promises the moon. Sorry for the pun there, but they're promising you quick profits in a short amount of time. And it's one of these things where this is a new strategy that this creator is using, where they're saying, oh, we're going to give people rewards for holding this coin for a long period of time. Anybody that sells this coin is going to pay a 10% tax on it. So it's something that I don't think a lot of people that are buying this actually know. I think they're just hearing from their friends or a peer, oh, go buy Safemoon. This is the newest thing. And they don't really understand what they're buying or why they're buying it. And that's the most important thing about investing. Understand what you're buying and why you're buying it. Invest in what you know. Don't just jump into the hype. And something like this, it's so hard to understand what this is. Even for people that understand investing, don't fully understand this. But it's one of those things where it's very shady on how you have to buy this. You have to go through different exchanges and buy certain coins, and then convert those to other coins, and then convert that to a wallet, and then convert that to a different exchange, and then you can buy it. It's very shady, and the only exchanges you can directly buy this from are called
Good Lord.
Bit and Whitebit or something. I've never heard of these until yesterday. So I don't know. It sounds really shady to me. I would just be very careful and only invest what you can afford to lose. None of us admins or moderators support this, and we're not endorsing Safemoon at all. I'm just providing a video with some information on what it is, and you can check out the video. I went into more detail than I did now because we don't have as much time. But back to you guys. What are your thoughts?
Yeah, I'm going to bring Dalton in because he is the resident advisor. There we go. Okay, so it looks like we're having a problem going to our group. Okay, it's on Facebook's end, but it's okay. We can post the video later. Dalton, what's your thoughts on Safemoon to the moon?
Safemoon. So I've been hearing about it. It seems like there's a brand new one every day, and these newer cryptocurrencies are not like anything of the past 5 years. It seems like every time they introduce one of these new cryptocurrencies, it's even further off chain. It gets further and further off chain from a major blockchain, and so they're really hard to buy. I could probably figure it out if I took about a half an hour, but that's way too long to figure out how to buy something. So when I took a look at Safemoon, and just to put this out there, I like to fancy myself a pretty intelligent guy. I've passed life license qualification exams. I've passed securities licensing exams, and I look at Safemoon, and I can't exactly tell you exactly how it works or exactly an easy way to actually purchase it. That's a problem for me because I should be able to have a working idea of how this financial instrument works. And it's very, very complicated to get a good grasp on how you're actually able to buy it and how it actually works, how it seeks to rise in value over time. So traditional cryptocurrencies, when they introduced it was a fork. So Litecoin was a fork of Bitcoin. Then there was, Ethereum, a decentralized application platform. Then there was ERC20 token, which was basically side chains of Ethereum. And now we're getting into things that are a side chain, a private blockchain that is a side chain of a side chain. And it seems like to go and get Safemoon, you have to run so far from a major blockchain. I find that concerning because with all these rug pulls that's going on in the cryptocurrency space, they take you off chain and they drain the liquidity from the system, and then all of a sudden you can't sell and you're not on a major blockchain, so they can shut that part of the blockchain down. These things get very, very concerning. So typically what I like to say, and my most recent article post that I shared in the group, Peter Lynch is great for it. Keep it simple. The more simple the concept, the easier it is to understand, the better the investment is going to be. Safemoon is incredibly complicated. I've sold just about everything in financial markets except for mortgages. And I can tell you that I'm having a hard time understanding how it actually works, how to buy it, how it seeks to rise in value. And that's a problem for me.
As someone who's been in the banking world specifically and has touched on mortgages, I can tell you it's probably easier to understand mortgages than it is this Safemoon. So you're probably very well equipped if you have to go into the mortgage business. But right now, I want to thank everybody who's watching us in the replay and live right now. Thank you. We're at 6 viewers. But we're going to announce the name of the show because we had a contest in the group to choose the new name. Dalt, you were a very big fan of this name. You were the one who suggested it to us. So just going to put it on the screen right now. Ladies and gentlemen, we are now officially Stock Dirty to Me, a beginner's podcast to the stock market. So we will be having stuff altered on the socials and that for this. There will be a dedicated social media package going with this so you guys can follow and hear more about the Stock Dirty with us when we post anything like that. So we're going to go on to our second thing, which brings us into smart investing, tips for beginners into the real world of trading in the market. Dalt, you wanted to bring this up because it was something was important to you to explain. So how about you talk about that to us, and then of course any links will be in the show notes down below.
Yeah, definitely. So trade selection is extremely important. So we're getting a lot of posts, and we love to see that you guys are posting. Keep up the posts. We're seeing a lot of posts as to, well, what are you trading on this day? What are you trading on this day? What are you trading on this day? And for the most part, the moderators, and the admins of the group, we're not trading anything new. We've already made our good investments, over the last 6 months, over the last year, over the last 2 years, and we're holding and contributing to those already great assets. What we find is with trade selection is there's not always great opportunities to take a trade. They don't come along too often. So when they do come along, you like to take a position in them and then continue to grow those positions over time. So just for me, I'll give you a little bit of background. I've waited so long. So I'm in Canada, so we have the weak Canadian dollar. It costs us a lot to get into your market. I've waited so long for a huge drop to get into Google and MasterCard. And last year's COVID pandemic, although a terrible, terrible pandemic, it provided the opportunity to get into a lot of American stocks at rock bottom prices. And I went for the fences in names like MasterCard and Google. And now that I have those are just going to continue to be contributed to over time. But I had to wait years to get that sort of buying opportunity, right? So good trades don't come along very often. And even with I've made it clear I'm going to do 5 options trades for the group, share entry and exit points in my analysis. I made that post 2 weeks ago now, almost 2 weeks ago, and I still haven't taken a single trade yet. And it's because I haven't come across that perfect trade that I feel confident in that's going to have a good chance of making money. So great trading opportunities don't come around very, very often, but continue to ask questions as to how to find value or what you're looking for. Because a lot of people think that a lot of stock prices like Google at over 2,000, Amazon at over 3,000, people think these stocks are really, really expensive. And given the economic climate that we're in, and given the customer acquisition power and the customer retention power of a Google and Amazon, they're actually pretty cheap. They're cheaper than Tesla. They're cheaper than a lot of other stocks. They're cheaper than Nvidia on a price to earnings ratio. These companies generate money very, very easily. They have great return on assets, great return on equity. They have huge capital expenditure budgets, and it doesn't really cost them much to acquire new customers. So just keep that in mind when you guys are looking at trades.
Right, so we're going to bring on Tony here because I always value his opinion on this. And as someone who isn't a financial advisor or licensed in the finance industry, you are an economics mastermind. What are your tips about actively trading in the market? I know we've talked in the mod group and that private chat, but some tips and tricks for the newbies in the group.
About actively trading?
Yeah, actively trading, or how do you go about actively trading? Do you look at actively trading, or are you sit back and wait like an adult?
I don't really do any active trading. I will make some swing trades, like where I'll buy something with the anticipation of selling it maybe 6 months or something like that. But I just look for what companies are undervalued based on their financial metrics. I'll throw a nice chunk of money at it, and then I'll sit and wait. And when it gets to a point where I think it's going to get to, I'll cash out and take my profits and put them into my long-term investments.
Right, so that's the best thing to do. Long-term investing is the growth here, and I want to talk a bit more about Tesla with you because it's kind of a weird stock and company and all, and I want to get obviously Dalt's opinion a bit later. But with Tesla's different crashes, it's kind of headline making news whenever it does come into the news. It's always something seeming negative or over the top with its CEO and Elon Musk. What are your thoughts on the stock's future given its crazy history so far?
Are you talking to Dalt or me?
You're on screen.
I thought you said.
Sorry, we'll get Dalt's opinion afterwards. I apologize. We're still working out the kinks, people.
Future? Well, yeah. Currently, I know we've talked about this a lot privately. I don't understand Tesla's stock price. It doesn't make any sense to me. It should probably be closer to like $200, $300. It's $750. I would never buy Tesla for that price. It based on all of the metrics that I'm seeing, and I could be wrong. To me, it's way overvalued. Its P ratio is like 800 to 1,000 somewhere last time I checked, which means that if you bought every share of Tesla, it would take you 800 years to make your initial investment back. The price to book ratio, I don't remember what it was at, but it's significantly, it was like 200 or something crazy like that, meaning that its share price is 200 times what its actual book value is. Don't quote me on the 200 because I don't remember exactly what it was.
But it's overvalued.
Yeah, it was usually a good price to book ratio is like 3 to 1 or less. That's what investors will look for. And if they can find a price to book that's 1 to 1, that's an amazing value. But to me, I would never invest in it. I invest in the S&P 500, and that's how I get my exposure to Tesla. But as far as the future, I think it's going to be around for a long time because Elon Musk, and there's a lot of aura behind Tesla. Yes. It's like mystique, and to me it's a lot of smoke.
The P.T. Barnum effect.
It's a lot of smoke and mirrors. It's not to say that they're a bad company. It's just they're a company that, think about this. We were in a lockdown. We were in a global lockdown pandemic, and Tesla's stock went up 600%. So how does that make any sense that their stock would go up 600% in a year? So how is it going to maintain that? At some point, they're going to have to sell more cars or more solar panels to match what their actual market value is. So when is that going to happen? I don't know. Could I be wrong? And could it hit $3,000 a share in 2 years? Sure, because Elon Musk, anything can happen. It's like the Kathy Woods, Elon Musk effect. I don't know. People just buy it to buy it because they believe in these people. And I get it. They're really smart people. But at what point are the fundamentals going to matter again? So that's my take on it.
All right, so we're going to bring Dalt up in here. He's that licensed advisors, as we said.
Yeah.
Again, this is just his opinion on it. He's not advising you to do it. So let's see if he gets up there. My computer always is slow. Sometimes it doesn't work. There we go. Yeah, Dalt is on the screen. Okay, I don't know anymore. Dalt, what is your opinion with Tesla's recent car crash hitting the news? Kind of negative a lot of times, but it doesn't seem to affect its current stock price. It seems like it just keeps rising. What is your view on the future of Tesla's stock?
Yeah, I saw the car crash. I didn't read up too much into it. I get news alerts from Wall Street Journal and Market Watch most often, so they just shoot up as a notification on my phone. So I did see that the car crash. I didn't even look into it any more than that. I haven't read any articles on it. I'm sure it's a Tesla's own problem. I have no doubt it always is, but that doesn't seem to matter. It's not the first time a car has crashed and someone has died. This has happened quite often, every other year almost, it seems, and I bet you it's going to continue to happen. This is kind of the thing that happens on the forefront of technology is same thing with Virgin Galactic too. When Richard Branson was flying those planes, that he did have a pilot die. So one of them crashed. So when you're at the forefront of technology, when you're endeavoring into space as in Virgin Galactic, or when you're endeavoring in electric autopilot cars like Tesla, there's always sacrifices to be made for the good of the world, that you could say, or if it's not for the good of the world, for the next step as far as I don't know, in life. So there's always going to be these things that happen. This will not be the last time. Someone else will crash and die. I'm sure of it. But the thing with Tesla is a lot of that market value is priced into Elon Musk. It's not priced into anything to do with Tesla, because there's nothing to do with Tesla that is worth anywhere near maybe even 100 billion. Never mind, what are they trading at? 800 billion. So there's so it's more of on Elon Musk's ability to negotiate, execute, and most importantly, raise capital. If they would have anybody else running that company at this kind of valuation, and that CEO went to the big banks and asked for a new fund, a share issue, they would probably say no. The big banks would be like, nope, you're trading at $800 billion. We're not allowing you to turn that into cash. We're not allowing you to issue any more shares at $700 a share. When they see Elon Musk coming, they believe in him. They believe in what he's done. This is the guy that has founded PayPal. He took his PayPal $180 million settlement when he sold the company. He went right to the desert and started launching rockets. NASA told him, get one out of the atmosphere and into space. You make one leave the atmosphere, we will fund your next 10 rockets, and we'll give you the NASA contract. And he blew $180 million in the desert, and it was on the last rocket that he fired that actually left the atmosphere. He called NASA and he said, I did it. It was hard, but I need the money now, and I need the NASA contracts, and NASA followed through, and that's how SpaceX got started. And then he leveraged that capital and influence into Tesla. Tesla came after SpaceX. SpaceX was first. So again, he's like a PayPal. He risks it all on SpaceX, and he gets that last rocket through the atmosphere. And now he's at Tesla. Everybody knows his story. Banks love him, and they believe in him. And part of Tesla's market value is Elon Musk. Kind of like part of Apple's value was Steve Jobs. Should Elon leave Tesla, that stock price would be headed down real quick.
All right, that's interesting. Great to hear that from both of you. We're gonna touch on the S&P 500 record-setting week. Just a bit more on it, your opinion on where it can go with the remainder of the year, the knowledge that's coming from this. Dalt, what do you think of that?
I'm looking for breaking 4,200 this week. If we cannot move above 4,200 on the S&P 500 this week, we are going to travel down big time. So I'd like to see us break through. If there's resistance there, and we try for 4,200 and we fall once, twice, three times. If markets can't go up and break through new levels, markets will go down. So I'd like to see us break through that level this week.
Excellent. Just before I jump over to Tony, you in the group chat, you mentioned a specific video that's going to be in the show notes that you think all traders should watch. You watch it yearly, correct? Can you just tell us a bit about that video, please?
Switch us around there, Phil.
What do you mean?
You posed the question to Tony, right?
No, I asked you. Did I say Tony? I apologize. No, don't. The video that investors should watch at least once a year, that you watch once a year. Can you just tell us a bit about that?
Sorry about that. It was the Paul Tudor Jones trader documentary. So I have saved it, and I'm actually going to download it on YouTube now. I've saved it several times to my profile on YouTube. And every time I save it and I go back to watch it, it has disappeared. That link has fallen down, or that account has been removed, and I can't watch it for a few weeks or a few months, and then somebody else comes with a new account posting the video. So it's a extremely low quality video. It's from the 1980s, and it profiles the run up of new market highs all the way up to the 1987 stock crash. And Paul Tudor Jones breaks it down for you with his quants in the video, his trading philosophy, and how he made money with stock markets rising and rising through new highs again and again, and rising through all like the bearish news, kind of like what's happening right now. Everybody's screaming PE ratios, this and that, but the market continues to move higher. So all the bad news is already baked into the market, even this market now at this point. So if it continues to move higher, just like in that video with Paul Jones, if it's already all bearish and it moves higher, markets are going to just continue to run, and they have continued to run, right? And so he has a unique way of analyzing market psychology and understanding how the pieces fit into making certain assets go up and certain assets go down. And he just has so many good, like, insightful things in there. And I think another good point, I was talking to Pratik Ghosh. He comments a lot in the group, and he was asking me about it. And he was like, "What are the most important points in the video?" And I said one of the most important points was the fact that this guy's running a multi-billion-dollar portfolio, and just for jokes, just to create demand or get demand to fall, he would send bluff orders to the exchanges. He would say, "Okay, send this order in to sell two billion at market." Then take it off after a couple seconds, and just keep doing that over and over again. So it looks like the market really wants to sell out. And what doing that gets everybody scared, right? They see a huge order flash across their screen. They're like, "Oh my God, they got a big whale trying to sell," and they all sell their shares. And Paul was on the other end picking up all the shares everybody was dropping. So there's things like that these big whales do. And if you watch the video, you'll really tune into how markets actually work. And it's actually a huge game, and people are actually trying to beat the shit out of you. So it's a really good video.
This is very interesting because we have a question in the group actually from Pratik Ghosh. Question: once your initial portfolio is set, is it advisable to go out for new stocks or continue investing on the initial ones? And you kind of touched on it, both of you, lightly, but I do want you guys to answer this. So we'll start with Dalt. Should he go find new stocks, or should he stay in the ones he has?
Depends what's in your portfolio and what your stock to cash ratio is. So I keep usually about 70-30. I like to have 30% of my portfolio in cash. Two reasons for that. Number one is that I'm not overly exposed, and number two, should things drop, I can always go back in and buy more. So depending on where you are, it all depends on that, but just make sure that you're looking. If you're going to speculate, this is very important. I forgot to mention this before. Yeah. If you're going to speculate, make sure speculation is a very small part of your portfolio. So a lot of people I find in the group are speculating on a lot of altcoins and a lot of penny stocks, and they show their portfolios and they got like 30 to 50 to 100% of their entire portfolio in extremely risky and speculative positions. When I speculate, it's between 2 to 5%. If I feel really good about the speculation, maybe I take it up to 10%, but it's never any more than that. And I actually did speculate this year. Earlier in January, I bought a really, really speculative position in an industry that has not proven, in an industry that has, that has no customers and no revenue. I felt good about it, so I have 10% of my whole portfolio in it. So, but because of the market, so the market is extremely frothy. Nobody cares about valuations, and things with no revenue tend to go up. So I am trying to take advantage of that, but I'm doing it at a very, very small position.
Excellent. We'll bring Tony here, get his opinion to answer that question. Then we'll wrap up the show. Tony, the question is: once you have your initial portfolio is set, is it advisable to go out or stay home and be safe?
Well, look, here's the investing should be boring, and people tend to overthink and and they'll just invest into a couple ETFs, but like, oh, my portfolio's not enough. Oh, I'm not making enough money. And there's these people, I'm only 10% this year. And then they post on the group chat or on the group main thread saying, just made $1,000 on Dogecoin. So now they want to jump into Dogecoin. They're like, oh, you just made $12,000. I only made 10% following the S&P 500. And then everyone's always looking for a way to make more profits in a quick manner. And I think the best advice I can give is just stick to your fundamental ETFs or stocks that you have. Build a nice foundation with S&P 500 indexes, or maybe like a NASDAQ 100 QQQ, something like that, or even the Dow Jones, whatever. Build on those, make those your foundations, make those the majority of your portfolio. And then if you want to take some chances, like exactly what Dalt said, basically, I'm just saying it in a different manner. Most of your portfolio should be in good, fundamentally sound investments. And if you want to add some speculative stuff, make that a small percentage of your portfolio. And you don't have to jump on the hype and follow the trends. And I know that's exactly what's happening. People are seeing what other people are doing. And it's one of those things, just worry about yourself and make sure that you're doing the right thing for yourself. And don't try to jump onto the trends like AMC and GameStop, because by the time you hear about it, it's probably too late. By the time you hear about GameStop or AMC and you want to buy it and your friend or someone told you, it's too late. It's too late. As soon as you buy it, it's going to
Absolutely.
So that's my advice.
Well, that's one of the great things about being in this group. You learn that fundamental of investing, and then you can become one of those people who know about GameStop before it becomes massively known. But we always here in the group, the Stock Dirty to Me podcast, always advise you, speak to an actual licensed financial advisor. All of this information is for educational purposes. It's our personal opinions. This is not financial advice. We just want to help you become financially literate and not illiterate. Tony, we're gonna leave here. I'm gonna let you get your few seconds to talk about your personal podcast that you have with your brother, and go ahead and tell us where we can find it.
Yeah, so check out my podcast, the Stock Bros Podcast. I'll post a link. And also I have a course for the ABCs of investing, and it's called Financial Literacy and Investing 101 to teach you the basic fundamentals of how investing works, compounding interest, the things you need to do before you start buying any stocks. So check that out. I'll post that as well. And lastly, I wanted to say that someone asked a question about buying gold and silver, and I'll briefly touch on that. As far as buying physical commodities like that, gold and silver are always a good bet. But the thing to remember about gold and silver is those are viewed as a store of wealth or a store of value, meaning that they're not going to be shooting up in record-breaking prices. They're not going to be beating the S&P 500 typically. And if you look at a chart of, stocks, index funds, and even crypto, they've significantly outperformed precious metals. But precious metals are always a good investment as a store of wealth to hedge against inflation. That's what those are there for, to hedge against the collapse of the fiat currency. That's why people buy those things. So that's my take on that. So
excellent. Thank you very much. Tony, always around in the group, but we'll see you next week on the show. Going to bring up my friend Dalton. Not me. No one wants to see my face. We want Dalton's here because he's more important. He has the knowledge, people. I follow your blog religiously because it is one of the ones that helps me become smarter and more literate in my finances. So please tell us where all our fans can find you and that on Facebook and that.
Yeah, you can you can see my blog at thebantingcourtcapital.com/blog link. I will post that link as well. The blog is completely free and it's always going to be free, so you'll always be able to go there, check it out, ask me questions about it on Facebook, DM me if you ever have any questions, and yeah, I also have an Instagram that I post from. I do live videos every Saturday as well, and that's at Rismay Life. So my last name, Rismay, Rismay, and then Life. So you can find me there, and just to hit home a point that Tony made, and for the guys that are worrying about gold and silver, I would tend to leave silver alone. But if you did want to invest in gold and take advantage of huge gold prices, buy gold when nobody wants it. I bought gold stocks when gold was at $1,000 an ounce, and believe me, those were some rough days. Because it looked like I was going to lose a lot of money, and I had to have like balls of steel to hold that thing. And gold stocks are falling, gold prices were falling, and I bought the gold stock at 1,000 an ounce when gold's at 1,000 an ounce, and then I sold it last year before the pandemic at about $1,800 an ounce. Buy it when nobody wants it. When everybody wants it, and you're hearing about it, just like Tony said, by the time you hear about it, it's too late. You got to buy when nobody's talking about it and nobody wants it.
All right, some wise words to end us off here. So thank you very much, Dalton. I'll speak to you later. And of course, you guys, he's always in the group, like he said. Now, a little self I went best business podcast for my digital entrepreneur podcast. So if you're interested in learning from entrepreneurs how to get their money online pre-COVID, in the industry for a long time, definitely check this out. I've I see only 12 out there. So thank you very much, everybody. Of course, very cheap.